guys.
Hello and welcome to KYC.
KYC. Acha.
Sorry. Bulls, Bear and Banter.
He's still in that zone.
No, I think subtly integrated
Yeah.
his KYC show.
Neeraj was onto him. He was like,
And
Hersh just integrates his shows in the first 5
Sorry,
minutes
sir.
of the show.
Yeah.
Bulls, Bear and Banter. Thank you for tuning in. Please hit like even before we start. Makes life easier. But IT is ruling the roost, frankly, last couple of days. And very, very strong moves. Couple of days now, what? Up 5% in the last 2 days. What a brilliant move.
I mean, yesterday we did have a lot of fundamental factors also, like Infosys buyback, and it might potentially trigger a similar move from the other players as well. Today itself, I don't know if it's moving on. Comments by Trump in the morning that we got that he's flipped the switch. Essentially, he is talking to India. That will boost, of course, trade, and Mahima will talk about her sectors like textile and shrimp exports, amongst others. But this also helps the American companies, probably start again consumer discretionary spends, and that will, of course, flow into IT possibly there. And you're seeing gains on the mid-cap names, to say the least. Something like Persistent, Coforge, Emphasis, LTIM are the top gainers, over 4%. But what was interesting, yesterday also we had Sandeep Agarwal in the show during 12:30, and what he said was, I'm actually not looking at large cap IT, I'm not looking at mid cap IT, I'm looking at the smaller companies which might not even come in small cap yet. We are looking at companies that are trying to have that niche focus and like a lot of growth, and that seems to be the sentiment for a lot of people and fund managers who are putting money in there right now.
That also, there are some macro tailwinds with regard to rate cuts which could come through. There's some uncertainty, of course, on tariffs. But the rate cuts could well be positive from a medium-term perspective rather than tariffs from a short-term perspective. And I had a very interesting note which came to me from Nuvama, Manav Chopra. He generally has gotten this right in the past, and that's why I really like him and I follow him. What he's saying is that the ratio of the Nifty IT to the Nifty 50 is at long-term support levels.
Okay.
And he is expecting a further rally on the Nifty 50 from the current level of 25K to 26,000, 26,200.
Bye.
He's not given a timeline, but he said in the near term, which means that you will have further leg up on IT, and IT will likely outperform the Nifty.
Yeah.
Because that ratio needs to get maintained and it's at a support level. That's his thesis. And therefore, that along with the fact that the FI long short positions also indicate a build up for IT is likely aiding the index, and he's expecting that to continue to go up. So this is a call which has come today. Of course, we will speak with Manav as well, either sometime today or sometime tomorrow. We scheduled that conversation with him. But this was something I found interesting myself. And while we were talking IT, I thought, let me pull it out and talk about it.
Absolutely. Yes. And I think the other big beneficiary that we've seen, one is, of course, on the Nifty as well, because we've not seen selling yet. Yesterday, we again saw a day. Yesterday actually was a surprising day because we didn't see selling post a good start of about 90-100 points. And yesterday, I think was the first day. Today, again, we've touched 25,000, slightly below that. If we can maintain that, I think you guys will be doing the closing show. So that'll be one of the major ones to watch, right? If it's able to maintain the 100-point gain as well. But
we saw FI buying also.
FI buying
21st of August. That was a good.
That was a good sign.
Not cross.
Yes.
So that was a positive, and probably one of the reasons as to why markets are seeing a good uptick today. Plus, we've the US trade negotiations that have come back. Plus the EU negotiations that are also going on, right? Shrimp stocks largely buzzing because of that, because almost a 20% boost will be available to a lot of shrimp exporters. FY24, around $1.1 billion exports were done via India, and if a 20% boost over and above that,
what is this 20% boost? Sorry, I know shrimp stocks are buzzing, but explain that.
If that falls in place, shrimp exporters will not attract any tariff.
So if in the EU, in the European Union.
Correct. So that will be a big positive. That happened with the UK as well, right? So similar trade deal will happen, hopefully with EU also, and that is one of the reasons as to why shrimp stocks are doing very well. And I've seen gains of 15%. Something like Avanti Feeds is seeing gains of 15%. Textiles is probably because of the US trade negotiations. Once again, that's the one
back in
sector that
focus.
that's seeing a bumpy ride every time Trump tweets. And textile stocks probably buzzing up, but a lot of counters in the textile also doing very well. Welspun Living, Vardhaman Textiles, Garware High Tech, all of these counters doing well.
Surprisingly, we're not seeing any move on pharma today because the US, if it acts in a way, at least as of today, what they are saying is should have reacted for these names like Sun Pharma amongst others, but we're not seeing that at least for today. At least that's the move which we're not seeing. But we also had the NDTV Profit conclave on GST yesterday, and the reason it was big to say the least. But the reason I mentioned is because Piyush Goyal also spoke about something that you highlighted on trade deals, right? Because India has been able to at least get those agreements that benefit them, because it's a clear case that our economy is going to grow much larger than what EU might in the next 25 years, and hence we have to get something that favors us. So definitely these sectors are getting impacted, and at least the government's focus is on giving a helping hand, to say the least.
Not just that, I mean, the SEO summit today, Alex and I were discussing that more than anything, it did send out a message saying that, listen, at the end of the day, no matter how big an economy US is, but you cannot end up messing with countries like India, China, or Russia, right? So, I mean, that sent out a huge message, and probably a solidarity as well in itself, saying that, no matter what, the economies are going to make sure that they run the way we expect them to run.
No, sure. But at the same time, it's very difficult to completely ignore the US as well.
Absolutely,
and I think that was the consensus conversation which happened from pretty much everyone who came in. So there was CEA, which is Chief Economic Advisor, Mr. Nageshwaran. He himself also said this. The Finance Minister also said this. Piyush Goyal has also said this. So we've had all of the ministers, all of the dignitaries who've come in have echoed that it's certainly not something that we can ignore. So this overhang of sorts will have to continue till we see a resolution on it. But they were positive that they're working towards a resolution. And the other piece is, of course, I want to kind of cap off IT, because OFSS is on a tear today. Oracle Financial Services. Now, that part also is interesting, because it might have led to the positive bias that we're seeing in IT today. They have announced multiple billion-dollar order wins in this quarter. They came out with earnings on the 9th of September. Multiple billion-dollar order wins is what they've announced, 4 in particular, with 3 customers, including the likes of an OpenAI. And therefore, what this does is it allows Oracle, the parent company, a lot of visibility with regard to this part of the business. And the cloud business will likely grow 8 times in terms of revenue and start commanding a very large share of the top line in the next 4 to 5 years is what they've guided for. And that is just the visible part of it. What this could mean for Indian IT companies, I'm sure that there are other companies looking at orders in the space, and therefore you could well start to see Indian IT also benefit from it, along with, of course, some of the larger data center companies and some of the larger cloud related companies like a Microsoft, and an Amazon. But India could also well benefit from that tailwind is the hope. And I'm guessing that's one of the other reasons why IT is up today.
And one of the things, before we go ahead, we request, all of you guys to put in questions, because yesterday we had Varsha, and a lot of questions from you guys were on pharma amongst others. So today we have Mahima. She looks at textiles, aqua, as well as consumption. The majorly is one of the biggest ones, and hotels also. So all those questions also, please hit likes. We're looking at 30 likes, and if you can send those, we can take questions faster as well. The other thing, before we cap off this GST conclave conversation, was also what Maruti Suzuki said yesterday at the conclave, that they are looking at small cars going from -6% growth, which is falling right now, to 10% for this year. And essentially, what's important is, because they've not said this anywhere before, they're yet to also announce price cuts on their models. While the others have come out and given a model wise what they happened. Why I'm looking at Maruti, because 18 models they have in the country, the capacity is 26 lakh cars. And the one benefit which, and I was just looking at the numbers basically because they've said that they'll go with from a -6 to 10, so that's a 16 percentage point differential over the next 7 months of FY26. If you just go by that logic and look at the small car number, because they sold about, I think, 8.9 lakh small cars last year, which was a degrowth of 7% from the previous year. So if I just look at that number, see what's happened in the first 5 months, we've fallen by 6%, as Mr. Bharati highlighted. But if you look at the other last 7 months, give us 16% growth compared to last year. You get a number of 9.8 lakh small cars that they can sell in FY26. That's an overall growth of 9 to 10%. And if with the assumption that SUVs last year grew 12%, and you might have a 12% growth again this year because Mahindra is guiding for 15 to 16 at a minimum level. You will see Maruti actually report a very strong domestic number of over 19.2 lakh, 19.3 lakh cars. And this is, of course, based on these assumptions of a 10% growth. If that is to happen in a year where you are expecting 2 to 3% growth in passenger cars, I think you will see that. And I think that's the why we're seeing that run up on Maruti amongst others, because like all brokerages, we saw MS upgraded over 18,000 rupees. But I think that's one of the key positives that I took from that discussion, at least that happened yesterday.
But they're yet to come out with
models. Yeah, so you might see smaller cars also a reduction of 7 to 8% on those models, based on the current price, the amount. But only the one thing which I'm watching out is that because there are some models in the SUV space that get a lower reduction and all of that, so that will be something to watch. But overall, it's a huge positive. It's a huge positive for them, to say the least.
See, I mean, while I take that entirely into account, what I'm surprised by, and I was just going through some data, Parag Parikh Flexi Cap. And Parag Parikh has done a lot on the auto side of things, in terms of they've added, or they've gone really bullish with regard to an M&M, for example, and they went very early. They're probably making a 50% return broadly, or maybe a 20% return on the M&M stock, because I remember they started buying at 3,000-ish at that level. So we're currently sitting at 3,700. They have actually sold 5 lakh shares of Maruti in this month, which is in the month of August. So their holdings are reflecting that they are trimming down on Maruti. Any reason why?
So they're essentially selling while on the rise of the stock.
Yes.
See, I think one of the thing is that, because
they are holding 24% cash. So they don't really need to sell.
They need to sell.
What I'm trying to kind of put out there. Sorry. Please.
No, I think it's basically that this year we were anticipating that the car segment will underperform, and a lot of people who bought into that theory last year that you could see growth this year, the first 5 months have not told that story yet. So I just feel like a lot of people have taken this opportunity to change a few aspects, but selling Maruti and getting into M&M is, of course, something that only their fund could do, honestly, because we've seen.
But they've not done that.
They've kept M&M at 3,000 and everything, but within the other funds also, I've not seen yet so much buying. I think we'll see the data if it comes by September end, and what happens in the holding structure of those funds. But actually, I haven't seen so much money come into one particular space, because we're not seeing that move yet on something like a Bajaj, because their reduction is going to be like roughly 22,000 similar. But Eicher, on the other hand, despite a lot of their models moving to 40% from 28, it has seen buying because of that as well. So you're seeing select pockets like Eicher, TVS, M&M consistently see buy flows. But I think people will now start to look at the other players as well. Like we saw the 13% move on Escorts the day this on September 4th. Since then, we've seen selling on that one as well, despite new launches, despite a better growth prospect this year.
So some profit booking coming.
So some profit booking has come up, but I feel.
Do you think that this run up in auto and sorry, I want to take Mahima's views as well, but this run up in auto, this nearly 18-20% run up, do you think it's overdone? Just from a perspective, I'm not saying
because he has an opinion on that.
Yes, I know that, and he has a strong one. But it's for viewer perspective as well. Maybe playing devil's advocate here. From the base, obviously, I fully appreciate that the base was probably low, but now we're at 52-week highs, and we're not seeing. We've not yet obviously seen how the sales will actually play out. We're expecting sales to be very, very strong, but you don't know how they're going to actually play out. Do you believe that the run-up has therefore been very sharp even before we've seen
I mean,
the story play out.
it's an 18% move on an index in a month. So it's definitely sharp to say the least. It is advocating that some of those sales will have, like the prices reflect that some of those sales have actually already happened. And that might be the case. But a lot of commentary also coming. Like yesterday, Maruti's management said that we are actually looking at capex also now, so that we have enough capacity to meet demand. They have a production capacity of 26.5 lakh cars. They don't need to come out and say that, but they're choosing to. One is that. The other one is a lot of the buyers from cars essentially were on the sidelines for small cars for 6 years now. And this is the point which I've been making repeatedly. 6 years, the cost of small cars have gone up by 45%.
But we're still seeing sales only in that premium segment.
Yes, in the premium segment. So I think once that comes, I'm pretty sure a lot of analysts are now looking at that, if we can able to project that growth, because the auto ancillary stocks also, which are not part of Nifty Auto, have run up a lot, largely anticipating a better domestic growth, because exports are now starting to see that kind of salience in terms of growth. So I feel like we could see some profit booking at these levels for people who want to get out right now, but I feel we could get surprised by the end of this month.
So then, do you think the pre-COVID level numbers that we've been talking about in terms of
so bikes, we've still not gone there for motorbikes. I think we might see some of that in this year, but we still might be short because 5 months have already gone and you've not seen that demand booster yet. And the other thing is Bajaj. Bajaj has been reporting sales fall in the domestic two-wheeler market since November 2024. Since 10 months, they've either shown flat or hardly any growth. So there's definitely a space where that's getting impacted, and we'll also have ABS from January. That'll be another thing. So I think if that gets delayed to April or something, which it might because of the scale, then we could see some demand kicker in this year. But I feel like it's still a long way to go for these guys as well.
It's the first time, and I want to kind of mark this out, since October of 2024, when the markets hit peak, that the Nifty Auto Index has breached the 3-year average price to earnings multiple that we saw. So we've seen it trade below the 3-year average multiple since October till now. It's the first time when we've seen a breach of that. So I mean, that's just one stat which I thought let me plug in.
But you wanna talk about, like, we have a big IPO today of Urban Company.
Yes.
I'm pretty sure a lot of people have at least used the service once. So what do you think of the business? What do you think of the IPO?
Well, business for sure is one of a kind, right? The other big competitor that Urban Company has is probably Yes Madam, which is one of the reasons why this company's IPO is interesting, because Yes Madam recently has received a lot of funding, and the services that it provides is cheaper than what Urban Company does right now, right? So it is kind of capturing a lot of that market, but I think just the way quick commerce and the food delivery had early players which could capture a lot of market share, and they're still saying, their brokerage report saying that it's a huge TAM to tap in, right? Huge targetable audience to tap in. Both of them can survive together, Eternal as well as Swiggy, and it's the same case here as well. Both Urban Company and Yes Madam can have their own market shares. For example, Urban Company is focusing more towards tier 1. Of course, they're planning to expand towards tier 2 and tier 3, but Yes Madam right now is tapping to that tier 2, tier 3 city, and probably that's one of the reasons as to why the rates are lower as compared to Urban Company also as well. But with regards to the IPO, I think majorly out of that 1900 crore, 1470 or crore is your offer for sale. Another 470 crore they are doing, which they are going to use, which is a fresh issue, which they are going to use for technological development, marketing, as well as some lease payments. Overall, this year revenue growth has been good. They've doubled in the past 3 years. Profitability this year, the 240 crore that is seen in terms of the net profit, out of which almost 220 odd crores is a deferred tax credit. So in terms of net profit, it's just 28 crores. But this is the year where they've swung into profitability, even in terms of the EBITDA that we were saying. Break even has come this particular year. So hopefully that profitability from here on at 525 should pick up, and that should probably be one of the reasons. If a long-term investor is kind of studying the counter, that should be one of the metrics to keep an eye on. Apart from that, return ratios also look healthy enough. They're not concerning or alarming at all. And it's one of a kind, and it's going to be a monopoly stock in this space, at least, to be listed on the exchanges. So yeah, one can go ahead and probably study the counter.
Okay, and what's the valuation?
Valuations are fair enough.
Question.
Yeah, I mean they're fair enough. Not you cannot compare it right now with any particular player that's present in, but you can compare it to something as a new age tech platform, right? So, and we've seen how new age tech platforms are valued at. They're crazy valuations, but in comparison to that, it's fairly priced right now. That is what a lot of brokerages are also going out and saying.
I think what's interesting
is
it's
priced at around 62 times.
I mean, you compare
because
that to
the
a Nykaa, a
profits,
Zomato.
Yes. So 62 times.
But is profitability the metric? Wouldn't you look at EV to sales or others like what will happen in for a similar business, like what happened with Ather also? You had that IPO at 300, it stayed there for a while. Right now it's trading at 540. Largely, it's just that it's still at minus 13% in terms of EBITDA margins, but it's just that the growth has been so strong. He's gone from minus 36 to minus 13 in 1 year. And essentially next year he might be EBITDA break even. And here you have a company that's already EBITDA broken even. If the growth is what he says, if the company is saying, I'm pretty sure it's a 30-40% growth at least, because it's a new business.
From 730, it's gone to
1200. So you are expecting that he should cross that 1600, 1700 revenue mark. I think they are in this mood, at least with the market, is that it might at least look at that aspect.
You know what? It's interesting because they're also expanding the scope of their services. And not just that, they've introduced a quick commerce model in that open company now, which is you get a maid in 30 minutes? So I think probably, and I feel that tier one, I have tried it. It's interesting. You just place an order and you get a maid in that 30 minutes time period.
And you have to key in as to what you want the maid to do or something.
No, so it's like
hourly.
It's hourly basis, 60 minutes, and you can get whatever services you want. And this compared to the traditional maids that we generally have, they're very sophisticated. Like they're well dressed, they come to your place, they do everything neatly, tidy up and go back. So it's interesting. I mean, that model is not something that you've heard of so far. And I think India has the audience for that, in my opinion. So
Metros have the audience.
Metros definitely,
for sure.
But let us know, viewers, if you actually use the service, because I haven't yet gotten it, but I'm pretty sure a lot of people who stay in Bombay, are not from Bombay, will use a lot of that service as well. So let us know in the comments as well.
What about the other one I want to talk about is Cartrade.
JM Financial.
This we spoke about yesterday as well. By the way, after I got done yesterday, I went back and I looked at it. I was talking about a 7,000 crore market cap. It was already at 10,000 crore yesterday. So please, I mean, the stats that we discuss sometimes can be maybe a bit dated as well. But I mean, so just be cautious about the numbers that we throw, and maybe you can go and check it as well once, before you go in and make a decision of what to do with the stock. But broadly,
I think it got downgraded by JM Financial today. So you saw the stock go all the way down to 18%. Now it's recovered a little bit.
But is that purely because of the run up that we've seen?
It's also because it's still trading at 43 times EBITDA for FY27. So it's not cheap.
Wow,
it's not cheap. And their point.
I was hoping that Puneet doesn't say that. It's not all that expensive. This
one is, and their largely point is that that B2C doesn't insulated from the cyclical spends that you might see on B2B platforms like that, because they're majorly of the revenue is coming from there as well. And they feel like the demand boost in GST does not necessarily mean a linear growth in these segmental revenues. So while Cartrade has gotten benefited, people were deferring their purchases, but they were still looking at, and that's why their classified business did well. OLX recovered in Q1, so you saw that big up move there. But largely they feel that the valuations is something which is pricey, and fair point to them because it's still pricey. But the interesting part is that FY25 EPS was 30 rupees for Cartrade. Right now it's trading at 2100, so you're seeing that jump. But it's expected to go to 50 rupees by FY27. So you're seeing that 60% jump in EPS. But I think a lot of that seems to be priced in, and hence we're seeing that correction today on Cartrade.
40 times for growth like that, 40 times, I don't know. I mean, may not look all that bad after what 43 times EBITDA is what you said. I mean, I don't know.
But there was a question on BSC. Pranit Karnani is asking, the team is doing a good job. Thank you, Pranit. Need the team's views on BSC. So is there anything specific that has happened that we missed or anything, because
No,
he's
it's
not mentioned?
so BSE, 2-3 things that you should keep in mind where BSE is concerned. One, there is a very strong long-term growth runway which is available. There's no doubt about that. We're currently at just about 10 crore users where the services of BSE is concerned. And we have a population, as you well know, of 150 crores. So there's no doubt about the tailwind with regard to which a BSE will see a traction from a business perspective, but you also have to keep valuations into account, and that's probably why we've seen the stock come off from the highs that it has clocked.
Yeah.
And that is understandable. Some amount is profit booking. Also, we've seen a switch between Tuesday and Thursday with the NSE, the expiry switch. And so that's something that we'll have to keep our eye out on in terms of trends, and we'll know maybe by end of this month or maybe early next month as to what are the trends that are playing out as a result of this switch. Is BSE gaining market share, losing market share, and the like? But the crucial piece is always going to be market share between BSE and NSE, because BSE has the scope to increase market share, but NSE has the right to win because it already commands such a large market share. It can just with a small switch able to continue to grow market share. So those are the things that you essentially want to keep in mind, near term as well as long term, whether BSE can continue to cling on. And lastly, the mood in which the government currently is, it's to try and reduce trading and speculation in the markets. That's the other moving piece that you want to keep your eye out on. How does that have an impact on volumes and EPS? Both of that. But maybe some color at the end of September once the results are out in October and the con call also comes through. We'll get a bit of color on what's happening with regard to market share given this Tuesday, Thursday thing. That's something you want to keep your eye out on. And what is the contraction in margin as a result of this, if any, is something that I may be worried about. So those are some factors you want to consider. You want to wait and watch, I think, on a BSE for the moment. But of course, the stock has been extremely volatile. We've seen sharp up moves, sharp down moves, and valuations certainly aren't on the cheaper side. So compared to historical averages, valuations have just run away because of the traction that the stock has seen.
There was one question by Ayushman. I'll just come to that in a bit on US. But Devanshu Kumar was asking your view on Raymond Lifestyle after demerger last year. It hasn't performed since then. Hoping it would get benefits from GST cut.
So there are two parts to this, because apparel has two segments right now in GST. If the apparel is below 2,500, then the GST has come down to that 5% mark from 12%. But if it's above 2,500, then you'll still be charged at 18%. So the thing here is the branded apparel garments, a lot of their portfolio will fall below that 2,500 mark, but the Raymond Ethnics will fall in that above 2,500 category. So I think it's both, a win situation and a not win situation for Raymond, where their branded apparel and textiles has been doing well this last quarter, comparatively to what it did last year. Branded textiles and apparel has done well, but I think the pain point for them is probably their cotton shirting is one of the pain points. And Raymond Ethnics, they're still saying that they'll take 4 to 5 years to come to that break-even point, because they're still expanding. They're putting in money to expand Raymond Ethnics and stores. At the same time, they are competing with a lot of players in the unorganized space who have higher price points than what Raymond gives right now. So that is one thing, and this is this includes even the organized space, something like Aditya Birla. So that is there. But overall, I think it will take time, because again, for Raymond Lifestyle, US tariffs is also a big part. They export. Their textile business exports, and till we don't have clarity on tariffs, you cannot expect Raymond Lifestyle to come out and give great set of numbers. But post the demerger, in my opinion, they've started doing well. They're also in the search of their top management leadership also, post Sunil Kataria. So that is also one reason. Once they get a proper management in place, probably stability, they will probably see some growth going forward. But as of now, yes, this is the situation.
Does tariff hurt them significantly?
It does. It does because textile part of their business, a lot of it is exported. I'm not sure of the percentage, but because they don't give out the exact percentage. Sure. But yes, their textile segment exports to the US, and tariffs will impact.
We saw similar like this thing that Vedant Fashion was also expecting a GST cut, but because of this ethnic aspect, it's getting impacted there as well.
Vedant Fashion's almost all of their
fully
portfolio
with the Manyavar
2,500 mark, right? Because it's ethnic, so it is in the price range of 5,000 to that 25,000, 30,000 mark, which is still probably cheaper than what Tasva does, these counters Cora does, but at the same time, this GST of 18% above that 2,500 mark has kind of impacted these players at least.
And what about ABLFL? Because yesterday we had a note come in, and 40% upside, if I recall right. I think 131 was the target price. But what do you make of that? Because 40% upside is no small feat. So is there some huge amount of value sitting there and which is being ignored by the market?
Yeah, so the idea was of separating the two, the Aditya Birla fashion retail and the lifestyle business was this, because the lifestyle business is your Louis Philippe and brands like Louis Philippe, right? So because of that, I think the sales in that segment has been happening, your Louis Philippe, etc. Whereas the other part is your pantaloons and counters like that, which is being kind of bringing down the whole business. So the idea was to separate the two and run them separately, and then maybe a divide and rule strategy as to how both of them can be ramped up. They are putting in money also in terms of where expansion stands for lifestyle business, and the guidance also, in fact, given by the management is pretty strong, and they're penciling in a growth of 20 to 25%. That's quite significant in a year where we've seen that these government companies have not done well. The tier 2 companies have done well, but not the tier 1 companies. So them coming out and saying that they will do a 20 to 25% of growth is, I think, significant, and that probably is the reason why Morgan Stanley has kind of come out and initiated a note on
and what are valuations looking like? I know Puneet uses Louis Philippe.
Yeah, I do.
Valuations are expensive because considering the fashion retail business is still incurring losses, not swung into the profitability business, the valuations are not looking cheap for sure.
I have to use Louis Philippe. They don't have a budget for me here right now. I have to source my own clothes right now. But Ayushman Lalani had a good question.
That was the case even for me. So that's fairly normal. Anyway.
So Ayushman had a question. Can we reach an agreement with the US whilst safeguarding the interest of farmers?
I think so.
Yeah, because that's been the motive. That's been one of the key motivations as well, to not disrupt a youth sector like that, and that definitely is a focus.
Only way now.
Yeah.
I don't think there is an option. I think the statements that have been passed seem to suggest that that's the only way, if at all.
Gaurav Bhatia had a question for Neeraj sir, and we'll ask him that when he's back tomorrow. BMW, Audi and Mercedes have reduced prices by up to 30 lakhs. Will he still buy a Desi vehicle? We will ask that. But the 30 lakhs has come on a price of 2 crores of that car. Yeah. So the lower ones have seen...
Neeraj can afford it.
Yeah, Neeraj can afford it, of course. But the lower ones have seen roughly 5 to 6 lakh rupee reduction. So we'll ask him that when he's back tomorrow. Yeah. Harsh, for you, Hemal Pathak is asking, which one NBFC will you pick if you have to keep it for 10 years? Please try to answer. So, sir, you have to answer.
I really can't answer. I can't give you names. But if you want to hold it for 10 years, you can pretty much pick plenty of them. So if you have that discipline to hold something for 10 years, what I would push you to do is look at maybe even something reasonably or slightly expensive, and you will still make decent money. Because but over the 10-year period, what I would really urge you to focus on is NBFCs which have proven that they are able to maintain good asset quality. Because you don't know, if say in 10 years from now, if you're in a bad asset quality cycle, and right now you may not be in as bad an asset quality cycle as maybe 10 years hence, you might buy something which is slightly expensive, but because of asset quality, the sharp re-rating that you may see may actually leave you with very, very low returns. And that's the risk you run when you buy lenders, if you buy it at mid-cycle and you have to sell it at the bottom of the cycle or at the worst point where asset quality has worsened, that's when you will start to see pain. So you want to keep a good margin of safety, but at the same time you want to buy a good company at which has demonstrated good asset quality across cycles. So hunt for that. Do your own research, of course. There are plenty of them, therefore, I would urge you, if you just do a little bit of digging, you'll find it. Don't buy something which is too expensive. I would not urge you to do that.
The other one is also for you. I think this is Sagar Jain, if I'm not wrong. It's written as Agar Jain. Correct me if I'm wrong here. But great show. Any thoughts on Northern Arc is what he's asking.
Yeah, so Northern Arc is an interesting one. It's trading at maybe at sub 1.5 times book, the last I had checked. And you have marquee investors who have entered. Madhukela has entered, if I recall right, at 208. You had an Ashish
Sorry, I have a
Kacholia.
link. So
Yes.
Go for it.
Yes.
You had an Ashish Kacholia who entered at around 170, 180. Now, of course, the stock price has rallied thereafter. They are, and basis my interactions with management, they are more focused on the non-interest income side of things. So the other income, where they are focusing on fee-based income. So they're trying to collect more data. That's what they're focusing on. And they're trying to thereafter use that data and enable other lenders to use that data. They, of course, do their own lending as well, but it's a smaller component. They give guidance based on NIM plus fee. That's what they give it. In the sense, some of these lenders are at a place where asset quality challenges are there, and therefore valuations have come off. But at the same time, if the cycle were to pick up, you could start to see growth come back extremely well. And if that were to happen, you could well see a re-rating and valuations as well. So it's an interesting play for sure. Of course, you must do your own research and you must test your risk appetite and you must look at valuations before you buy. We have tried a couple of times to bring in the management, both on KYC, both on India Market Close as well. But for the moment, it's been proving to be a slight hurdle to get them. But hopefully post the Q2 numbers, I'm hoping that they'll come and they'll talk. Then maybe we'll get a better perspective.
Okay, the next question is on PDS. Now, this is from Akash Bhatt. Any comments on PDS? PDS is also another counter that exports garments to the US.
From
UK, and
Bangladesh.
Europe. From Bangladesh.
I remember because
Yes.
it came on KYC.
It came on KYC.
So-
But it's an interesting one because even if from Bangladesh, almost 12% is from US, but 40% from Europe, UK is 32%. So the EU deal that we've been talking about could largely benefit this counter once in place. The UK FTA has already happened, so it's already benefiting the customer. I think from what I remember is that despite of the tariff, the company did well in Q1. I think what that said is around 25 or 26% odd growth happened from the US sales despite of the tariff uncertainty. And I think that was a strong commentary that was coming in from the management. So that was an interesting part. Plus, they recently did a QIP also, where they've paid off a lot of their debt also. So that is the debt overhang is also reducing on the company. So yeah, fairly a good company to keep your eye on, because yes, the export part, if the EU deal goes through, tariff deal in favor of India, UK deal has already happened. One of the counters that could benefit from all of this.
All right, and guys, frankly, completely out of time. We've well overshot today. So that's all for today, actually. Thanks so much for joining us. Of course, Mahima joined us today. Hopefully, she'll join us again tomorrow. But thank you guys for tuning in. Please hit like, comment, share if you like what we're doing. And of course, take care, stay safe, keep those questions coming, and start getting a little bullish on the Nifty.